Question 1. A buyer and seller are entering into a real estate transaction. The buyer requests a title search to ensure there are no outstanding issues with the property. During the title search, it is discovered that there is a judgment lien on the property from a previous owner that was never satisfied. What is the best course of action for the title insurance producer? They proceed with issuing the policy, as the lien is the responsibility of the prior owner. B. Issue the policy but include an exclusion for the judgment lien. C. Delay the closing and inform the parties that the lien must be satisfied before the title can be insured. D. Proceed with the closing and file a claim with the title insurance company after the fact. Answer. C. Delay the closing and inform the parties that the lien must be satisfied before the title can be insured. Explanation. In New Jersey, a title insurance producer is responsible for ensuring that the title is clear of any liens or encumbrances before issuing a policy. Judgment liens are involuntary encumbrances that could affect the property's marketability. According to lien priority rules in New Jersey, a lien must be satisfied before transferring a clear title to a new buyer. If a lien is discovered, the producer must delay the closing until the lien is resolved. Issuing a policy without addressing the lien. Answer A would be improper, and including an exclusion. Answer B would not fully protect the buyer. Filing a claim post-closing. Answer D does not prevent the issue upfront and could lead to complications for both the buyer and title company. Question 2, scenario-based. Mr. Gonzalez is purchasing a home in New Jersey and has requested title insurance. The title search reveals that there is an easement across the property for a neighboring utility company. Mr. Gonzalez is concerned about the impact of this easement on the property's value and use. As the title insurance producer, what is the appropriate action to take in this situation? A. Exclude the easement from the title insurance policy to protect the insurer. B. Advise Mr. Gonzalez that the easement will be covered by the policy and there are no concerns. C. Explain the terms of the easement and offer Mr. Gonzalez the option to purchase an endorsement that protects against future disputes related to the easement. D. Cancel the transaction, as easements are uninsurable and prevent clear title. Answer. C. Explain the terms of the easement and offer Mr. Gonzalez the option to purchase an endorsement that protects against future disputes related to the easement. Explanation. Easements are common encumbrances that grant the right for others, like utility companies, to use a portion of the property for specific purposes. The presence of an easement does not necessarily prevent the issuance of title insurance, but it is critical to explain its impact to the buyer. Offering an endorsement. Answer C provides Mr. Gonzalez with additional coverage in case the easement becomes a source of dispute. Excluding the easement. Answer A leaves the buyer unprotected, while stating that there are no concerns. Answer B ignores the potential issues the easement could cause. Cancelling the transaction. Answer D is unnecessary, as easements are commonly insured with appropriate disclosures and endorsements. Question 3. In New Jersey, when conducting a title search, the title producer discovers a tax lien on the property. Under New Jersey law, how is the priority of this tax lien determined in relation to other liens on the property? A. Tax liens are junior to mortgage liens but senior to judgment liens. B. Tax liens are always senior to all other liens, including mortgage liens. C. Tax liens are equal in priority to other voluntary liens on the property. D. The priority of tax liens is determined by the date of recording, like all other liens. Answer. B. Tax liens are always senior to all other liens, including mortgage liens. Explanation. In New Jersey, tax liens take precedence over all other liens, regardless of the order in which they were recorded. This is a critical aspect of lien priority rules in the state. A property tax lien is considered superior, meaning it must be satisfied before other liens, including mortgage liens, can be paid off. This ensures that municipalities can collect taxes before any other creditors. Answers A, C, and D are incorrect because they misrepresent the legal hierarchy that gives tax liens priority over both voluntary and involuntary liens. Question 4. In New Jersey, a title producer is preparing to issue an owner's policy of title insurance. During the title search, a mechanic's lien is discovered, filed by a contractor who worked on the property. The seller disputes the validity of the lien, claiming the work was incomplete and unsatisfactory. What should the title producer do in this case? A. Issue the policy without further action, as the lien is under dispute. B. Issue the policy with an exception for the mechanic's lien. C. Delay the issuance of the policy until the lien is resolved or bonded off. D. Issue the policy but immediately notify the insurer to prepare for a potential claim. Answer. C. Delay the issuance of the policy until the lien is resolved or bonded off. Explanation. Under New Jersey law, a mechanic's lien is a powerful legal tool for contractors to ensure they are compensated for work performed. Such a lien must be addressed before issuing a clean title. The title producer should delay the issuance of the policy until the lien is resolved or a bond is obtained to ensure payment to the contractor. Issuing the policy with an exception, answer B, does not fully protect the buyer. Proceeding without addressing the lien, answers and D, leaves both the buyer and insurer exposed to potential legal disputes and financial liability. Question 5. Scenario-based. M.S. Thompson is purchasing a property in New Jersey and wants to ensure there are no undisclosed heirs who could later claim ownership. The seller inherited the property through or after the death of the previous owner. During the title search, the title producer cannot find records of other potential heirs. What should the title producer do next? A. Issue the title policy without further investigation as the will is valid. B. Recommend that M.S. Thompson purchase an endorsement for undisclosed heirs and issue the policy. C. Request an affidavit from the seller stating there are no other heirs and issue the policy. D. Refuse to issue the policy unless the heirs can be definitively ruled out through probate court. Answer. B. Recommend that M.S. Thompson purchase an endorsement for undisclosed heirs and issue the policy. Explanation. One risk in transactions involving inherited property is the possibility of undisclosed heirs later asserting ownership. While a will can indicate the seller's right to sell, it does not always guarantee that no other heirs exist. By offering an endorsement, answer B, the title insurance producer provides additional protection for the buyer against future claims. Answer C does not provide enough legal protection, and answer A could leave the buyer vulnerable. Answer D is too restrictive, as probate processes often provide sufficient clarity without requiring all heirs to be explicitly ruled out. Question 6. In New Jersey, which of the following is not considered an involuntary lien on a property? A. Tax lien. B. Mortgage lien. C. Mechanic's lien. D. Judgment lien. Answer. B. Mortgage lien. Explanation. A mortgage lien is a voluntary lien as it is created with the consent of the property owner when they take out a loan secured by the property. In contrast, involuntary liens, such as tax liens, mechanic's liens, and judgment liens, are imposed without the owner's consent, usually due to legal obligations like unpaid taxes, unpaid contractors, or court judgments. Answers A, C, and D are examples of involuntary liens that can affect a property's title. Question 7. A title insurance producer in New Jersey is conducting a title search and identifies an easement for access to a neighboring property. What impact does this easement have on the title, and how should the producer address it? A. The easement makes the title unmarketable and no policy should be issued. B. The easement should be disclosed in the title report, but no further action is required. C. The easement should be included as an exception in the title policy. D. The producer should remove the easement from the title to ensure marketability. Answer C. The easement should be included as an exception in the title policy. Explanation. Easements are common in real estate transactions and usually do not render the title unmarketable. However, the title insurance policy must reflect the presence of the easement by including it as an exception. This means the easement will not be covered by the policy if it becomes a source of a dispute later. Simply disclosing the easement without including it as an exception, answer B, does not offer full protection. Removing the easement, answer D, is not typically possible, as easements are legal rights that run with the land. Declaring the title unmarketable, answer A, is unnecessary, as many properties with easements are insurable. Question 8, scenario-based. Mr. Patel is purchasing a foreclosed property in New Jersey. The foreclosure process was completed, but the former owner is still occupying the property and refuses to leave. Mr. Patel is concerned about potential claims from the former owner. How should the title insurance producer proceed in this situation? A. Issue the policy immediately as the foreclosure process is complete. B. Recommend Mr. Patel obtain an owner's policy with additional protection against post-foreclosure claims. C. Delay the issuance of the policy until the former owner vacates the property. D. Include an exception in the policy for any claims related to the former owner. Answer. B. Recommend Mr. Patel obtain an owner's policy with additional protection against post-foreclosure claims. Explanation. Even after foreclosure, there can be risks if the former owner refuses to vacate the property or attempts to challenge the foreclosure process. While the foreclosure may seem final, claims from the former owner could arise, so Mr. Patel should seek an owner's policy with specific endorsements for protection against post-foreclosure claims. Issuing the policy without additional coverage, answer A, exposes Mr. Patel to legal risks. Delaying the issuance, answer C, is unnecessary, and simply including an exception, answer D, does not adequately protect the buyer. Question 9. In New Jersey, which of the following types of property ownership allows one owner's share to be automatically transferred to the other owners upon death without passing through probate? A. Tenancy in common. B. Joint tenancy. C. Tenancy by the entirety. D. Fee simple. Answer B. Joint tenancy. Explanation. In a joint tenancy, co-owners hold equal shares, and the right of survivorship means that when one owner dies, their interest is automatically transferred to the remaining owners, bypassing probate. This is not the case with tenancy in common, answer 8, where no right of survivorship exists and the deceased interest passes through their estate. Tenancy by the entirety, answer C, applies only to married couples and also includes the right of survivorship but is not as widely applicable. Fee simple, answer D, refers to outright ownership of a property and does not involve co-ownership with automatic transfer of interest. Question 10. In New Jersey, what is the purpose of a title insurance commitment? A. To guarantee that the title is free of defects. B. To provide preliminary evidence of the condition of the title before closing. C. To serve as the final title policy issued after closing. D. To serve as a contract between the buyer and seller regarding the sale of the property. Answer B. To provide preliminary evidence of the condition of the title before closing. Explanation. A title insurance commitment is a document issued before closing that outlines the terms and conditions under which the title insurance policy will be issued. It serves as preliminary evidence of the current state of the title and lists any potential defects or exceptions. It is not a final guarantee of a clear title, answer A, but rather an agreement to ensure the title once the conditions are met. It is not the final policy, answer C, nor a contract between buyer and seller, answer D, as it focuses on the title insurance aspects of the transaction. Question 11, scenario-based. Mr. and Mrs. Hernandez are purchasing a property in New Jersey. After reviewing the title commitment, they notice a restrictive covenant stating that the property cannot be used for commercial purposes. They plan to operate a small business out of their home. What steps should the title producer recommend? A. Recommend that the Hernandez family proceed with the purchase but include an exception in the title policy for the restrictive covenant. B. Advise the Hernandez family to negotiate with the seller to remove the restrictive covenant before closing. C. Inform the Hernandez family that the restrictive covenant will prevent them from using the property for their business and recommend they seek legal counsel. D. Issue the title policy without any exceptions as the covenant does not affect the residential use of the property. Answer C. Inform the Hernandez family that the restrictive covenant will prevent them from using the property for their business and recommend they seek legal counsel. Explanation. Restrictive covenants can limit how a property is used, and in this case, the covenant prevents commercial use. The Hernandez family should be informed that they may not be able to operate a business out of their home unless the covenant is legally removed or modified. Legal counsel is recommended to address this issue, including an exception in the policy. Answer A, does not solve the problem, and negotiating with the seller, answer B, may not be feasible if the covenant is enforced by a third party. Issuing the policy without exceptions, answer D, exposes the buyer to legal challenges. Question 12. In New Jersey, which of the following best describes the concept of marketable title? A title that is free of all liens and encumbrances. B. A title that can be easily sold or mortgaged to a third party. C. A title that is guaranteed by a title insurance policy. D. A title that is recorded in the public records. Answer B. A title that can be easily sold or mortgaged to a third party. Explanation. Marketable title refers to a title that is free from significant defects or claims, making it easily transferable or acceptable to a reasonable buyer or lender. It does not have to be free of all liens or encumbrances, answer A, but it must be free of issues that would make it unmarketable. The presence of a title insurance policy, answer C, does not inherently make the title marketable. Recording the title, answer D, is important but does not guarantee marketability. Question 13. A title insurance policy in New Jersey typically covers which of the following? A. Future zoning changes affecting the property. B. Unrecorded easements affecting the property. C. Defects in the title that were unknown at the time of the policy's issuance. D. Claims arising from the homeowner's failure to pay property taxes. Answer C. Defects in the title that were unknown at the time of the policy's issuance. Explanation: title insurance policies protect against defects in the title that existed before the policy was issued but were unknown to both the buyer and insurer. Future zoning changes. Answer A. Are not covered by title insurance, nor are unrecorded easements. Answer B. Unless specifically addressed. Claims related to unpaid property taxes. Answer D. Are generally not covered if they arise after the policy is issued. Question 14. Which of the following is an example of a cloud on title in New Jersey? A. A mortgage lien has been paid in full but not properly recorded as satisfied. B. A newly filed deed transferring ownership of the property. C. A zoning ordinance restricting the type of structure that can be built on the property. D. A recorded easement allowing access to a neighboring property. Answer A. A mortgage lien has been paid in full but not properly recorded as satisfied. Explanation: a cloud on title refers to any issue or discrepancy in the public records that could affect the title's clarity. In this case, a mortgage lien that was paid off but not recorded as satisfied can create confusion or uncertainty about the property's title. Newly filed deeds. Answer B. Zoning ordinances. Answer C. And easements. Answer D. Are not considered clouds on the title as they do not represent unresolved claims or discrepancies. Question 15. Scenario-based. A title producer in New Jersey is preparing to issue a policy on a property with an existing tax lien. The buyer is unaware of the lien and the seller has failed to disclose it. How should the title producer proceed? A. Issue the policy with an exception for the tax lien, allowing the buyer to resolve it after closing. B. Notify the buyer of the lien and advise them to require the seller to pay it off before closing. C. Issue the policy and include an endorsement that protects the buyer from the tax lien. D. Proceed with the closing but advise the buyer to negotiate a low price to account for the lien. Answer B. Notify the buyer of the lien and advise them to require the seller to pay it off before closing. Explanation: the presence of a tax lien is a serious issue and the buyer should be informed immediately. The lien must be paid off before closing to ensure the buyer receives a clean title. Issuing the policy with an exception. Answer A. Leaves the buyer exposed and including an endorsement. Answer C. Is not a standard solution for tax liens. Negotiating a lower price. Answer D. Does not resolve the issue of a clouded title. Question 16. In New Jersey, which of the following best describes a quiet title action? A. A legal proceeding to remove defects or disputes over the ownership of a property. B. A process to transfer ownership of a property from one party to another. C. A method to record a deed in the public land records. D. A court proceeding to determine the market value of a property. Answer A. A legal proceeding to remove defects or disputes over the ownership of a property. Explanation: a quiet title action is a lawsuit brought to settle ownership disputes and clear the title of any defects or claims that may cloud it. It is commonly used when there are competing claims to the title or unresolved liens. It does not involve transferring ownership. Answer B. Recording a deed. Answer C. Or determining the market value of the property. Answer D. Question 17. In New Jersey, how does an endorsement affect the title insurance policy? A. It adds additional coverage or modifies the terms of the policy. B. It cancels the policy in the event of a title dispute. C. It limits the coverage provided by the original policy. D. It extends the duration of the policy's coverage period. Answer A. It adds additional coverage or modifies the terms of the policy. Explanation: an endorsement is an amendment to a title insurance policy that either expands or modifies the coverage. It can provide protection against additional risks not covered by the original policy. It does not cancel the policy. Answer B. Or limit the coverage. Answer C. The duration of coverage is typically not extended through endorsements. Answer D. Question 18. What is the role of a subordination agreement in New Jersey real estate transactions? A. It allows a mortgage lender to take a low priority position behind another lien holder. B. It removes a lien from the property entirely. C. It transfers a property's title from one owner to another. D. It provides a legal description of the property boundaries. Answer A. Allows a mortgage lender to take a lower priority position behind another lien holder. Explanation: a subordination agreement is a legal document in which a lender agrees to take a lower priority in the event of foreclosure, typically to accommodate a new mortgage or refinancing. It does not remove a lien. Answer B. Transfer the title. Answer C. Or describe the property boundaries. Answer D. Question 19. Scenario-based. A buyer in New Jersey is purchasing a property that was recently involved in a quiet title action. The title insurance producer is aware of the action but is unsure if all potential claimants were notified. What should the producer do? A. Issue the policy with an exception for any claims that may arise from the quiet title action. B. Investigate further to ensure that all parties with potential claims were notified and the quiet title action is final. C. Issue the policy without any exceptions, as the quiet title action should have resolved all claims. D. Refuse to issue the policy until all possible claimants are located and agree to release their claims. Answer. B. Investigate further to ensure that all parties with potential claims were notified and the quiet title action is final. Explanation. A quiet title action should resolve all disputes over property ownership, but if some potential claimants were not notified, there could still be unresolved claims. The title producer should ensure that the action was properly conducted and is final. Issuing a policy with an exception, answer A, leaves the buyer exposed to potential future claims, and issuing the policy without investigating, answer C, is risky. Refusing to issue the policy, answer D, may not be necessary if the action was properly completed. Question 20. In New Jersey, the buyer purchases a property and the title company discovers an old mortgage from 20 years ago that was never properly discharged. What should be the next step to ensure a clear title? They ignore the mortgage as it is too old to affect the title. B. Request a quiet title action to clear the old mortgage from the records. C. The seller must provide a signed affidavit stating the mortgage was paid off. D. The buyer can purchase the property, but the old mortgage remains as a potential encumbrance. Answer. B. Request a quiet title action to clear the old mortgage from the records. Explanation. A quiet title action is a legal proceeding used to resolve issues such as old, unresolved mortgages that appear on title records. This step ensures the title is free of the encumbrance and can be transferred with clear ownership. Option A is incorrect because even an old mortgage could still affect the title. Option C is insufficient without proper legal action, and D leaves the buyer at risk of future claims. Question 21. A homeowner in New Jersey sells a property and gives the buyer a warranty deed. After the sale, a third party claims they have an easement on the property that was not disclosed. What is the likely outcome if this turns into a title claim under the owner's title insurance policy? A. The buyer must pay for the easement's impact on their property value. B. The title insurance company will deny the claim due to insufficient coverage. C. The title insurance policy may cover losses or costs associated with resolving the easement issue. D. The seller is responsible for compensating the buyer directly for any loss. Answer. C. The title insurance policy may cover losses or costs associated with resolving the easement issue. Explanation. The warranty deed guarantees the grantor seller provides the title free from encumbrances. If an undisclosed easement impacts the buyer's ownership rights, title insurance will often cover the issue, compensating the buyer for any loss or costs to resolve the situation. The claim would typically be processed according to the terms of the policy. Options A, B, and D are not the correct answers because the buyer is protected by title insurance and the seller is typically not directly liable for compensating the buyer unless there is a breach of the sale agreement. Question 22. In New Jersey, when conducting a title search, which of the following would not appear in the public records? A. A recorded lien for unpaid property taxes. B. An easement recorded for utility purposes. C. A mortgage lien placed by a lender. D. A family member's verbal agreement to share the property. Answer. D. A family member's verbal agreement to share the property. Explanation. Verbal agreements such as those between family members do not typically appear in public records, as only written and recorded instruments such as liens, mortgages, or easements are officially documented. A proper title search in New Jersey would reveal written encumbrances like tax liens, A, recorded easements, B, and mortgages, C, but not informal verbal arrangements. Question 23. Which of the following is a common defect that could cloud the title and require resolution before title insurance is issued? A. Unpaid homeowner association dues. B. Incorrect legal description in a prior deed. C. Seller's promise to repair the property after closing. D. The property's inclusion in a new zoning classification. Answer. B. Incorrect legal description in a prior deed. Explanation. A defective legal description in a prior deed can cause uncertainty about the boundaries and ownership of the property. This kind of issue would need to be corrected to ensure clear title before insurance is issued. Options A, C, and D do not directly impact the title's clarity, although unpaid homeowner dues could result in a lien, which must also be addressed. Question 24, scenario-based. Jane is buying a house in New Jersey, and during the title search, the title agent discovers a judgment lien against the property for unpaid medical bills by the previous owner. The lien was filed after the previous owner mortgaged the property. What should Jane expect regarding the lien? A. Jane is responsible for paying off the judgment lien. B. The mortgage lien has priority, and the judgment lien must be removed before closing. C. The judgment lien will automatically transfer to Jane upon closing. D. The title insurance will not cover any issues with the lien, and Jane will need to litigate. Answer B. The mortgage lien has priority, and the judgment lien must be removed before closing. Explanation. In New Jersey, liens are prioritized based on the order of recording. The mortgage being recorded first has priority over the judgment lien. Jane should expect the title company to require the judgment lien to be removed or satisfied before closing, ensuring she receives clear title. Title insurance typically covers such issues, but the lien must be resolved for the policy to take effect. Question 25. Which of the following is a correct description of the concept of lien priority in New Jersey? A. The lien that is most recently filed has the highest priority. B. Mortgage liens always have higher priority than tax liens. C. Liens are prioritized based on the date of recording in public records. D. The amount of the lien determines its priority. Answer C. Liens are prioritized based on the date of recording in public records. Explanation. In New Jersey, lien priority is generally determined by the order in which liens are recorded in public records, known as the first-in-time, first-in-right rule. Tax liens, however, often take priority over other types of liens regardless of recording date. Options A, B, and D are incorrect because the timing of the recording, not the amount or type, typically determines lien priority except in the case of tax liens. Question 26. Which type of lien will generally have priority over all other liens even if filed later in New Jersey? A. Mortgage lien. B. Mechanics lien. C. Tax lien. D. Judgment lien. Answer C. Tax lien. Explanation. Tax liens take precedence over all other liens, regardless of when they are recorded. This means that even if a tax lien is filed after a mortgage or other lien, it will still have priority. This is an exception to the general first-in-time, first-in-right rule for lien priority. Mortgage liens, A. Mechanics liens, B. and judgment liens, D. do not supersede tax liens. Question 27. A title policy exception refers to A. risks that are covered under the policy, B. risks that are not covered under the policy, C. any risk that the insured chooses to ignore, D. claims that have been previously paid by the insurer. Answer B. Risks that are not covered under the policy. Explanation. An exception in a title insurance policy identifies specific risks or issues that the policy does not cover. These could include certain defects, encumbrances, or uninsurable conditions. The insured will not be protected against these risks. The other options, A, C, and D, do not correctly define exceptions in a title insurance context. Question 28. In New Jersey, which of the following is true regarding title insurance policies? A. Owner's policies protect the buyer and lender's policies protect the lender. B. Lender's policies protect both the buyer and the lender equally. C. Title insurance only covers the buyer and not the lender. D. Lender's policies expire once the mortgage is paid off, but the owner's policy continues indefinitely. Answer A. Owner's policies protect the buyer and lender's policies protect the lender. Explanation. Title insurance provides different protections based on the type of policy. An owner's policy protects the buyer's interest in the property, while a lender's policy protects the lender's interest. The lender's policy does expire once the mortgage is paid off, but the owner's policy remains in effect as long as the buyer owns the property. The other options must state the coverage provided. Question 29. Which of the following endorsements is commonly added to a New Jersey lender's title insurance policy to provide additional protection? A. Mechanics lien endorsement. B. Zoning endorsement. C. Survey endorsement. D. Environmental endorsement. Answer A. Mechanics lien endorsement. Explanation. A mechanics lien endorsement is often added to lenders' policies to protect against claims that arise from unpaid contractors, laborers, or suppliers. The other endorsements listed, B, C, and D, address specific concerns like zoning or environmental issues, but are not as commonly required for lenders' protection in a typical real estate transaction. Question 30. Which of the following best describes the role of a title insurance underwriter in New Jersey? A. Performing property inspections to determine structural risks. B. Setting premium rates for different types of title insurance policies. C. Evaluating title search results and determining acceptable risks. D. Drafting property deeds and contracts for the real estate transaction. Answer: C. Evaluating title search results and determining acceptable risks. Explanation: the primary role of a title insurance underwriter is to evaluate the results of the title search and determine what risks are acceptable for coverage under the title policy. The underwriter assesses any potential defects, encumbrances, or other risks that may affect the title's marketability. The other options, A, B, and D, do not accurately describe the underwriter's responsibilities.